For just a few years now, JEPI has become one of the most popular monthly income ETFs in the market, and it's been one of my favorites as well. I recently made a video about how I invested $1,000 into JEPI and how much I make in dividends each month with that much invested. So I've been a fan of JEPI for a while now, but there's an even newer JP Morgan Derivative Income ETF that's not quite a year old yet called JEPQ. So JEPQ is an ETF that pays out monthly dividends and is, in my opinion, one of the best ETFs for consistent dividend income, especially for high inflationary times like what we're in right now. Its total assets under management, or AUM, is currently at about $1.7 billion, which is actually still very small compared to other ETFs, but as it's gaining in popularity, that number will continue to grow. It generates most of its income from a covered call option strategy, which is basically the same strategy that JEPI uses, but the biggest difference is that JEPQ trades these options on some of the big name mega cap tech stocks listed in the NASDAQ, rather than the S&P 500. When it comes to the sector exposure, it's obviously heavily weighted in the information technology sector, with the rest being in other sectors like communication and consumer discretionary. The expense ratio for JEPQ is at 0.35%, meaning you'll be charged $35 for every $10,000 invested as a fee for owning the fund, which isn't a crazy high expense ratio, but also not very low either, considering there are Schwab ETFs like SCHD, for example, with expense ratios as low as 0.06%. But one of the reasons why this ETF is one of the best for dividend income is its current dividend yield that usually hovers around 15 to 17%, which is perfect for when the market is being boring and trading flat for multiple months in a row. And even though this ETF is still a baby, the dividend payouts have been consistent and stable ever since its inception not too long ago. Aww. So we don't have too much past performance to rely on, but regardless, it's still paid out those dividends every single month so far, and each payment has been around 38 to 68 cents per share. What's also cool about this ETF is, including the monthly income that it provides, it will also appreciate in value as the NASDAQ gains as well. So when we're in a bull market and the NASDAQ is trending up, JEPQ will follow with a lot less volatility. And with less volatility, that means that when the NASDAQ rallies, JEPQ won't necessarily rally too, but should gain in value along with the index. But when the NASDAQ is trading flat or even trending down, JEPQ will lose slightly in value, but should continue to provide that monthly income and keep you out of that dividend trap. So now let's take a look at some of the biggest holdings in JEPQ. As you can see, the majority of its holdings are in those large cap tech stocks that we all know of, like Microsoft, Apple, Google, and Amazon, as well as Nvidia here in the middle. And these kind of interesting looking symbols here are the equity linked notes, or ELNs, that the fund invests in for that derivative income, which allows the fund to pay those monthly dividends to its investors. So we now know that JEPQ is extremely similar to JEPI. So with that being said, let's compare the two. Both ETFs invest in large cap US stocks and pay a pretty above average monthly dividend yield, but like we saw, JEPQ focuses on NASDAQ 100 companies, while JEPI is focused on lower risk, lower volatility US stocks. And because JEPQ is trading options on higher volatility stocks, the premiums on those options tend to be a lot higher, which is why the dividend yield for JEPQ is a few percentage points higher than JEPI. Like we saw earlier, JEPQ pays around a 15 to 17% dividend, and JEPI typically pays around a 10 to 12% dividend. And because of these high dividend yields, both of these ETFs have limited potential for capital gains, but if you're an investor purely focused on dividend income, that shouldn't be too much of a concern, and in my opinion, both these ETFs are perfect for a dividend portfolio. Looking at their performance, since about October of 2022, JEPI has had a total return, including dividends, of over 3.5%, with JEPQ having a total return of only under 2.5% since October. But then if we look at the year-to-date returns for both these funds, JEPQ has performed significantly better than JEPI by over 6%, and again, these returns are including dividend payouts. So as we've seen here, both funds have their similarities, but also their differences as well, which is why I own both in my portfolio. I only own about 4 shares of JEPQ so far, but I'm looking forward to building up that position over the long term and receiving that monthly income from dividends. Like any investment, JEPQ does come with some risk when you buy and own shares, and you will be taxed on the dividends that you make.
Where's my money? You gonna give me my money? Where's my money, man?
But in my opinion, I think it's one of the best dividend ETFs out there right now, and is still pretty underrated at the moment. But let me know in the comments below what you guys think of JEPQ, and if it's an ETF that you'd consider owning in your portfolio for that monthly dividend income. As always guys, thanks for watching. Feel free to leave a like on the video, and I'll see you next time.